Good morning, everyone, and welcome to the morning pre-market analysis and homework session for Friday, May 16th, 2014. For all those Canadian, happy May 2-4 weekend. It is a holiday for Canada this weekend, so we should see a little bit of light volume on the indices today, depending on how many Canadians cut out early. And then our markets are closed on Monday. My name is Doug McKay. I am the founder and head moderator of Quantum Leap. We've been around for coming up on 5 years now, and we have a private Skype room that is just a private group of traders, retail traders, that we talk about the market and chat and talk about our trades. If you're interested in checking out the room, you can send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, we are going to be porting our Skype room up into the new website, the stealthtrader.com website, which is coming soon. And if you want to send me an email to get more information on Stealth and what we're doing with Stealth Analytics, you can send me an email at d.mckay@stealthtrader.com. So each morning we come together in a live session to look at the levels. We do go through a regular routine that includes key numbers, macro to the micro, and then looking at the trends macro to micro before we get into some chart analysis, and then picking our levels for the day and our targets. So if you're watching this on YouTube after the fact, you might want to just skip ahead. But we can't skip because this is a daily routine to prepare ourselves for the marketplace. Before I do anything, I do have to do the legals, so here we go. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used for trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own trade plan, do your own due diligence. Okay, so with that said, let's just take a look at yesterday, because yesterday I made some comments, and I want to make this perfectly clear. Is, the main hypothesis for yesterday and our main line in the sand was this 1879.75, and we were looking for a retest of the range low from yesterday at 82 and a quarter. And we were actually using the value area. Let me just put this to the back. We were using the value or the LVN rate here at 83 and a quarter in order to get long into the prior naked open and back inside to the lower distribution that we were talking about with our first target being at 85. But we said if we failed to get inside of that range and above the LVN, we weren't getting long until we got above the LVN. But if we rejected and got below the range and broke below 79.75, we were going to get short. And that was the trade setup on the open. Now, we opened up at 81. We went up and we put our opening swing high in at 81.50, came back down, tested the 79.75 with a low at 78.75, didn't break up, went back up and hit the opening swing high a second time, failed off of it, came down and broke the 79. And that's where I was in the trade room at the time. We kept the live room open, and I said, get short, and with our first target being that 75.75. I'm not going to get into all the reasoning. And so now you've got to look at, we go through a series of checkpoints, okay, to tell us what the auction, okay, is saying. So we look at all our things. Did we open up inside a range and inside of value? we did not. We opened outside of range and outside of value. So that's the first thing that you've got to be thinking. Then, what was the size of your opening swing? I don't have my opening swing up here. Howard, what was the size of the opening swing yesterday? We had 2 3/4 point opening swing. Greater than 2 points, okay, is giving us a possibility of a rotational day. Then we look at the OTF. Is OTF, other time frame participants, participating on the open? Yes, they were. Is there clear direction on the delta? And you can see the delta had clear single direction down. You don't see any green candles on the open, so the direction was down. But the most important one as we're developing is we never had a close above the VWAP. And, there was comments made in the room yesterday about, trying to look for a long. And I kept on saying, you don't want to look for a long here. Until we get a close above the VWAP, you want to remain to the short side. And you only want to trade to the short side because the market was telling you that until we get above the VWAP, the direction is down. And we came down and we came down and hit our next trade area, got a little bit of a counter reaction there, but we never got back above the VWAP. Then we went down and we hit our main target below, okay, which is the 6450, the microcomposite VPOC and the composite VPOC, and then we basically just went sideways, okay. But again, never, ever, ever, ever getting above the and giving us a close above the VWAP. That didn't happen until late in the afternoon, and that was really the only time where you really wanted to try to trade to the long side. Was there trading opportunities trying to find a bottom here? Yeah, there was, but the problem is they were the high risk, low probability trades. You were better off to wait for the move up and find opportunities to keep shorting this, because it was anytime you have a situation like that where you had a possible trend day setting up, that you want to stay with the trend at that point in time. So you want to always take the opportunities to the downside, even though you could have caught and got some scalps, okay. But it wasn't; those weren't the low risk trades. Those were the high risk trades because there was still possibility of a further downside push down to this 55 1/4. And you can see, even though we had some moves up, every time it rallied, you had opportunity to continue to build your Theo and continue to stay short. And that was the play for the day. Now, we have a B-shaped profile. A B-shaped profile after a series of up days is an indication that you've got a long liquidation, okay? And we're still inside of the major balance area around 64.50. So the sky is not falling yet, okay? And we've come down, and the B shape shows that the buyers stepped in and halted the move down, and that this was a long liquidation. I'm not saying it's going to happen, but the probabilities around this is generally you'll get a move back up in the direction of the trend after a long liquidation. So you have to, you have to be thinking still that this isn't the end of this up move. This is just a retrace on a long liquidation. So just keep that in mind today. So let's get back into our regular homework and get through it. So we're above the open of the year, 1837.75. We are in a bull year still. We do have the key area above us, 1898.50. Only a point and a half off of that 1900. I'm still not convinced that the high is in as of yet. When we get below 55, then I'll start considering that that's a possibility. But I'm keeping my I'm keeping my bias on the sidelines at this point in time. We are currently below the month open, so we have a bullish year, but we have a bearish month going on so far, and our month low is 1854.50, and that's just below the 1855 and a quarter CLVN that I'm using as a key line for whether or not we're going to get a bigger retrace. But until we break that, we're still inside this balance zone, this distribution zone, in around 64.75. And of course, our prior month open was that 64.50 microcomposite VPOC. Or well, just below the microcomposite VPOC by 1 tick. And then we have our previous month high at 1892.50. So that's what the macro numbers are showing us. Let's take a look at yesterday. We had a Globex open going into Thursday at 85.75, a high in Globex at 88.50, and a low at 79.50. And then we opened auction out of range at 81. We had an open drive. I would even say that you could make an argument for an open rejection reverse or an open test drive, because we did get to swing up, okay, to test the range low, and then the sellers stepped in. You had responsive sellers stepping in to keep us outside of range and drive us down. So I'm actually going to use a open test drive, because we tested two sides on the open, either an open test drive or an open rejection reverse. Regardless, you didn't want to fade that move because it acted very much like an open drive. We broke the IB to the low side for a normal variation day. Our opening swing high, 81.50. Our opening swing low, 78.75. I thought it was 81.75, but we'll just check that for 2 3/4 point opening swing. And then our initial balance, 81.50 and 64.50 for 17 point. That is a huge, initial balance. And then all our intraday numbers were lower. Lower 1230 number, 62.50. Lower RTH high, 81.50. Lower RTH low, 59. And the close was lower at 67, with our VPOC shifting down to 68. So we are seeing a little bit of a retrace. So we have to, be aware that the trend could be, can be stalling, but there's no evidence to make us get our, our short biased on as of yet, personally. Our 20-day ATRs are still constricted at 14. Just over 14 1/4 on the RTH, just over 16 1/2 on the full session, and just under 8 on the Globex. And this is a pretty tight Globex range. I think one of the clues that we should watch for is when they start trying to move this market overnight to the downside, then I would consider that you might want to really start thinking on the short side. Value area high, 68.50, value area low, 61, and we broke the IB to the low side inside of the first 15-minute pocket at 9:41 Central. And then we had some heavier, volume coming in on this push down. And again, that's what's indicative of a long liquidation, because the bulls are liquidating positions, okay, and therefore you're going to get higher volume, and the higher volume is what caused that move down towards that 64.50. Going over to the daily report, so far our full session high is 68.50, full session low is 62, and our full session ATR targets to the upside is 1878.50, and to the low side is 1852. And that 52 is actually a number I'm going to talk about today. News today, we had building permits were better, and oops, sorry. Oh, come on. I've got a new mouse that has got the side button that does funky things with my charts. Housing stats and building permits were better this month. In fact, they're supposedly some of the best for a while. Of course, we've got the University of Michigan Consumer Sentiment coming up at 8:55. And again, remember, this is subscription-based, so news could possibly come out a little bit early on this one. So be careful on that open. All right, so let's go and take a look at the macro to the micro. Whoops, I don't want to do that. I always like to start with the monthly chart. Okay, you've got the 9 EMA, the 20 SMA. Those are the two moving averages that I like to watch. You've got good slope, good separation on the two MAs. We are trading inside of the main distribution for last month. The trend is very much intact on the monthly, even though we're seeing a little bit of weakness. But we want to watch this this month close at 1879 and a quarter, because if we break that 79.75, or we could come down and test the 9 EMA again. On the weekly, same thing. You're losing a little bit of slope, but we do have slope and separation. We've come down and tested the 9 EMA on the weekly again, but we did not break below it. That break below that is going to give us a move to break that 55, and then the next key level is going to be down there at that 42. It's actually 43.50 that I'm watching below, and I'll show you what that looks like on the composite chart in just a couple minutes. Going to the daily. The daily, we are seeing weakness. We have, we had this technical gap that we created. We closed the tech gap, and then we broke below the 9 and the 20, and we're currently trading below and in the lower distribution of the prior day. Coming into an MA hug here, that's likely going to happen in around that 75. So we are seeing some weakness coming in on the day. Going to the daily geometric, there's 3 forks on here. There's a long-term fork, a shorter-term upward sloping fork, and then I've got the opposing fork that I put in with that last swing high at 1890, 850 being the B point. We've broken below the center line of the shorter-term upward sloping fork, and I would be looking for a possibility of coming down and testing this 1851.50 area. Remember that our 20-day ATR target to the downside for the full session will take us down to 1852 as a possibility. A retest of the center line of the intermediate upward sloping fork will take us up to 1883 and a quarter. And we do have an energy point right here between the two opposing shorter time frame forks that's due on the 21st, beginning of next week. So even if we come down and if we hold inside of the lower line of the upward sloping fork, the long-term upward sloping fork, then we still have time to rebound up above here. The key to me is if we break below the longer-term lower line of the fork, because then we're below that 1855 and a quarter CLVN and outside of the longer term fork, and we're likely to come down and come all the way down here, somewhere down here in around that remember that triple distribution zone that we've been watching on the composite, that 35 and a quarter, 29.50, and 25 and a quarter. So that's what I'm seeing right now on the geometrics. Let's just go right back and take a look at the trends coming into the intraday. We've got a strong move down and a trend starting on the 4-hour. We've got this technical gap that was created so far on technical gap. Technical gaps are closed through time or through price or a combination of both. We've got a little bit of a combination of both. This is a technical gap with a Mr. Sneaky inside bar, and since so far we're going sideways, but we haven't closed the gap. A gap close on price will take you up into that 69.75 area, that little CHVN likely, but we could just go sideways and let the 9 EMA come down. But so far the trend on the 4-hour is definitely to the downside. On the 30-minute, A little bit different story. We've come down. We had this technical gap right here. We came up and closed the gap, and then we've just been going sideways and consolidating. But we are trading above the 9 and the 20 right now, but no clear trend on the 30-minute. On the 5-minute, a little bit different story. We created this technical gap down here, came up and closed it. We've got a naked cross below us at 1864. 75. How do you like that? Right at the microcomposite VPOC. So naked cross at 1864.75 on the 5-minute. Mark that down in your journal. But we currently are starting a upward trend. We've got slope and separation, but we're likely going to close, create a bit of a technical gap right here within the next few minutes coming into the open of the market. So we'll just keep an eye on that. So let's go to the composite chart. Now this is going to be a little bit busy for some of the people that have not been around because I've got a lot of composites on here. But the overall composite, the microcomposite, goes all the way back to, now I've moved it back to the 17th. I could probably actually bring it to the 16th, but I use the 17th. And currently the microcomposite, or the most accepted price in the long term, is that 64.75. And the value area high is 77, and the value area low is 37 and a quarter. So we're right back in to balance, and we're inside of value on the longer term. I'm just going to move this to back. All right, and we're right in and around the major magnet, which is the composite. The composite, which is this black profile, is the profile and the volume at price going back to that October the 9th 2013 swing low. So the most accepted price overall going back to October is 1864.75, right in the thick of this balance zone. And we've come down and tested it yet again. We're currently trying to get, and we are above this line. Remember the 68 and a quarter? This 68 and a quarter was an area that we were watching and trading off of last week when we were in this distribution zone. We were long above it and short below it, and that is going to be the case again today. So we're going to go back to using that 68 and a quarter, because below 68 and a quarter, you've got the naked close at 67 and a quarter and a major magnet down here at 64.50, with the other side of balance being in the, I don't know what my CLVN, the other side of balance around that being that 59.75 still, okay, but more importantly, the 55 and a quarter is the one that I'm watching, because below that, we don't have a lot below 55. We've got, the 49.50, but this is a blunt area of the composite, and it's likely to get matured. So you got that 52 CLVN, 52 and a quarter, and 52 is our 20-day ATR target to the downside. So this is still a possibility of coming down and testing this area. But once we're into this distribution down here, you can see we've got all these wicks right here, this unauctioned territory. So we could chop around in here, but likely, and the probability will shift that as we chop around in this area, we're going to have to come down and likely try to find buyers with conviction at 43.50. And 43.50 is the microcomposite, okay, on the way up and on the way down, okay, where they accepted value, okay, once they broke out of this triple distribution zone. I was just talking about this triple distribution zone, which, once we get below 55, if they can't hold 43 and we break that CLVN at 39, then we're getting outside of the value, the longer term value area low, and the probability will shift to coming down into this triple distribution zone and trying to determine fair value between these three key CHVNs, 35 and a quarter, 29.50, and 25 and a quarter, with 21 and a quarter being the other side of balance down there. If we hold above the 68.25, then I'd be looking for a rotation up first to that 69.75, where we tried to hold value on the swing high up to that 81 area, and up towards the 7250 CHVN, which is the dominant composite high volume node, and then you've got that microcomposite VPOC that from the shorter term balance up here at 75.25. And then the other side of balance and the key line above us is this 79.75, the one that we were looking at to hold, going into yesterday's session, which we did. And we said if we got below that, then we're getting back inside the smaller value area, and we were likely to rotate down towards 72.50. And then we said if we broke that 68.50, and you can go and listen to the recording, I said sell your heart out into 64.75, because we're going there if we break that 68.25, and that's precisely what happened. So let's take a look at our overnight and move our numbers over to our trade chart. So we're currently coming up and actually making a new high overnight, so we could get some expansion here even before the RTH. But currently, right now, we have an overnight low. I think that would probably be in at 62. Okay, and then we'll just see. I'm going to put the current high in at 69.50, but we're likely to go and tap that 69.75 and even probably test this LVN. You can see that the body and the value area is in the lower side of yesterday's range, with the value area high being at the 68.75 and the value area low being at 60.75. So but then you've got a LVN right here at 70. So I got to wait to see. There's a 70 right there. So we're putting in new highs. But this is going to be a key area to trade off of right here, this 70, because above that we've got all kinds of repairs to be made above. And I've got to wait to see what we do in terms of this this high. So let's deal. While they're putting in and trying to determine, how high the Globex is going to be, let's talk about the low side right now. So the low side, I would be looking at this 70 area with 68.75 as your first target below, coming down and testing that value area high at 68.75 with the 68.25 just below it, and then your naked VPOC and your naked close is all right in this area right here. So if they get below 70 and they get inside of value, I don't think the 68.25 is going to hold much much support, and I'd be looking to come down and take out the naked close at 67.25 and the naked VPOC here right there as well. So that's going to be our main target below 70, and we'll just front run it by by one tick so it shows up, and then below that, and I can get rid of the overnight VPOC right now is 67 as well. So your RTH and your overnight VPOC are going to correspond with each other. So you've got a lot of confluence in this area. So below 70, you're likely to come in and take this out. Below that, let's just get rid of this and we'll expand this out so you can see it. Below that, okay, you are again down here, okay, in the major distribution. So the main target below inside value and inside range is still going to be that 64.75. And if we can't hold above that, if we can't hold above this 70 area, and the likelihood is we're going to come down and come and hit that key level again. Let me just edit this. And the probability at that point in time, if we don't take out the overnight high, and we'll talk about that when I start doing the upside, to come down and take out this overnight low and test this 60.75. And 60.75, okay, is just above this this 59.75 and the 59 low. So I would be looking at responsive buyers stepping in here at the value area low. If they don't, I think you've got a nice little add-on to come down and test the range low and possibly come down to that 58.25 CHVN. So the first target below the 60.75, I'm not going to use the 59. You want to get funded before 59, but the target really is going to be 58.25. Come on, I don't want to edit the button, I want to use it. Okay, and then with the key area that you want to see us hold, okay, is this 58.25. And then below 58.25, you've got the 52, which is our ATR target, and the key CLVN. In fact, since the CLVN is 52.25, we'll put it at 52.25, with below that being 49.50. And below 49.50, you've got the 45.25, and if you remember, that 45.25 and 46.25 was an area we were trading off of when we were down there before, which is what you want to hold. And the big target, an extended target to the downside, is going to be that naked VPOC at 43.50. And then you're getting into the 39 CLVN down here, but more important, you've got a naked close at 39.75, so I put a trade area at 39, because below 39 we have a very big probability of coming down and testing the open, because then the bears are thinking they've got a possibility of getting us into a bear year. So the target below that is going to be 37.75, our year open, and then you've got a naked VPOC at 35, and then we'll just put those three distribution zones down there, because I think that's the destination that we get to, is that triple destination at 35.25, 29.50, and 25.25, with a key level we've got to hold at that CLVN at 21.25. And again, I don't think we're going to see that today. I just always got to have your trade plan set up for all possibilities, so that you're not thinking about what you need to do when you need to do it. All right, so let's see where we're at currently right now. Let me just bring up the composite and see what our high for the night is. So 71.50 is our overnight high right now. All right, so if we hold, we're going to open up, if we open up in this area right now, above 68.75, we're going to be opening up above value and above the, the major distribution from yesterday. And if we hold this this 70.25, then I'd be looking for a rotation to take out the overnight high, with the first target being that 72.50 CHVN. And then you've got the 75. I'm going to use 75.75 because that's the number we were using yesterday. with 79.75 being your, actually you've got the smaller value area high at 76.75, so we'll use 76.75 for looking for responsive sellers to step in. And above that, then you're likely to go up and test that 79.75. And if we get above that, remember 81.50, 81.50 right here was where we tried to hold value after going and making that new high at 92.50. And that's where we tried to hold. And remember, that's the target that we were looking at from a breakout of this balance area, and then where we were looking to come down to find buyers once we made the new all-time high. So 81.50 is going to be the target above, and of course that's yesterday's value, our initial balance high. Come on. And then if we get above that, then we're going to break out a range, and you've got the 85.50 naked close as a extended target to the upside, and then you've got 90.25 up here with this area up here, the range high at 93.25 and the naked VPOC at 94.25. And 94.25 is the CHVN above, and that's going to be our extended target to the top side. I'll just put it one tick below. And then above that, of course, you've got the 98.25 or 98.50, which is our all-time high right now. Obviously, that's got to be a target. What am I doing for time, Howard?
About 5 minutes.
Oh, really? Great. I really took a long time today, eh? All right. And then you've got 1900 above. And, you know, 1902, 50. These are numbers we've talked about, so I'm just going to go through them very quickly. And then the big target, which is the 1910, which is the rule of 10. Okay. So looks like we're going to open up below this 70. And look for them to test 70. If they fail off of this 70 CLVN or LVN, you know, look for the rotation down to take out and test this 68.75, and a break through that. Look for a move down to your first target below, which is going to be the 67.50 area, and you know, in around all these things that we've got, the naked close, the naked VPOC, the overnight VPOC. But if we get above 70.25, look for them to take out the overnight high, 71.50, and hit our first target at 72. And I think at that point in time, if we can hold about above 70, we get you know, some drift on low volume to the upside. I'm losing my voice. So I'm not going to try to get any more analysis in. There was a lot to talk about this morning. We've got to find a way to cut these sessions down to get more information. But right now, let's just take a look at the Keltner channel. Our Keltner channel upper line we just tested at 71.50. We've got a possible walk the line set up here. So we're getting our Renko reversal bar right here. If we open up and we come up and we get a close above the upper Keltner line, we're likely to get a Keltner upper line walk up to that 75 level. But if we get the Renko bar and we break and hold below that 70, we're likely to get a double Renko reversal and a move back down to test the Keltner center line at 65.75. And by the time we get there, it's likely going to be 64.75. And then test of the lower Keltner is going to take us down to the other side of balance around that 64.75 and test the CLVN at 59.75, which correlates with the Keltner channel low. So that's going to conclude our morning homework session. As always, trade well, trade safe, and we will catch you on the flip side.